homework. Others obviously are diligently going through it. That's great. It's pretty much self-paced, so when you can, obviously send that through to me, and then I'll have a look at it. But otherwise, uh, the idea of the modules is to get you thinking about creating and developing your own money management system. So our goal for these 10 weeks of money management, and it will eventually be 10 weeks of money management, is to start thinking about how we can get the most out of our trading. Now, I've had a few conversations with some people about obviously how to do that, how to set up a money management system and strategy, and pretty much over the last, I would say, 5 weeks, we've been focusing in on what I like to call the growing of the account. Now, what I want to do today is I just want to take a little bit of a step back. Like I'm pretty comfortable percentage level. Then win rate and our reliability of our system. So we've done a fair bit of work on the DAX. As you start to put your system together, whether you're building your own system or you're using a system that you've already got, and you're going to tweak it and basically supercharge it, then you need to know these things. These things need to be part of your money management strategy. So we've kind of gone forward a little bit and said, right, well, we want to have a look at how to get the geometric growth going, but we want to take a step back now and just start to pull apart some of the key elements to our system. So again, one of the things with our system, with our money management process, is we want to make sure that we want to basically compare our profits to our losses. So the size of our profits compared to our losses. So if we look at that and Van Tharp talks about it in his book and his books quite extensively. As I said, if you haven't read anything on Van Tharp, he's got some excellent material. So he looks at that as a initial risk, or your multiples of risk. So every trade that we take or is registered in our trading system and or in our data. We looked at the DAX data. That has what we call an initial risk, or a which is our initial risk, and that amount, whether it's $100, $500, $1,000, that basically is our initial risk, and our wins are referred to as multiples of our initial risk. So if we look at our R multiple, we're looking at basically how much money we're making, or how much money we're potentially going to make or gain based on how much we're prepared to put on the line, or our initial risk is. So if we look at our risk model, we're looking at, say for example, we're risking $500. We have a gain of $1,000. Then we have a 2R multiple. Now, when I talk about the trading system, and I talk about you developing and tweaking your trading system and building your system as well as your money management strategy, this information, these are multiples, the amount of risk we're prepared to take per trade, and the potential gain we're going to get from our trading, these become critical because they help us to analyze how each of our specific setups is going in relation to the risk model that we have in place with our strategy. Because if we think that, say for example, we've got 4 common setups or 3 common setups, 2 of those setups have a standard risk of 1-to-1, and one of those setups has a 2R multiple, so every time we risk 500 we're potentially going to make 1,000, then ideally we want to be, when we're trading that 2R multiple, we potentially may want to have a slightly different position sizing strategy, because we know that we have the potential to get significantly more, double obviously, on our initial risk investment. So these are some of the things that we want to know. We want to basically know what our risk, our R multiple is per trade or per strategy, So if you're looking at your system, and I'll take the HVMM as an example, if we get a basic cross setup, what typically is our win rate for that particular trade? So we talked about win rate previously. What's the strike rate on that particular setup, and what does it typically deliver as far as risk to reward? So are we risking 500 to make 500? Are we risking 500 to potentially make 1,000 on every trade that sets up? And they're just the re-entry. So we want to break these trades down to see exactly where we can potentially look to get a better edge on our strategy, rather than just taking a fairly standard approach to the way we trade. We want to potentially open that up a little bit and start to assign these risk multiples or these R multiples to our trading. So let's just go through, and a couple of the other things we need to look at, obviously, commissions and slippage. They're other things that we need to build into our money management strategy and plan. Now, you may not have factored that in, but as you develop and do your testing on your strategy and start putting together your system with your money management plan, commissions and slippage will be critical. Now, I haven't got in here yet retracements, but I'm going to talk a little bit about retracements and the ability to scale into trades, and I'll probably do that a little bit more next week. But that's one thing I want you to potentially look at as well: the ability to be able to scale into trades based on retracement, and that can potentially help you with things like slippage on some of the strategies that you may be trading, particularly where you've got markets that are a little bit more volatile, that have a propensity to retrace, say, it could be, say, 10%, 15, 25, 50% of the trade before it goes to target. And the thing that springs to mind probably mostly is the pound US dollar. So Tom, you'd probably or you'd probably agree with that some of the currency pairs, they have a tendency not to break out straight